Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, June the 15th. The year's 2023. Let's talk trading. Red News Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine, different from Walmal. Walmal, we got a bunch of red news in less than a minute. Are you ready?
We'll see what she does, and we'll tell you.
Okay,
Yeah, just
so let's see. It's U.S. red news. And so right now the candles are black, so that means chances are it's going to go up from here.
yep. Gotta wait for the next candle to make that final decision. But yeah,
No, you got
it's
to, no, it's this candle. This is the 29 candle right here.
oh, okay. Well, that's right. Look at that FOREX.com. It stopped ticking down. That's interesting.
Yeah. So,
Okay, 24 seconds. Gotta
let's,
refresh my page for some reason. My Java applet stopped working.
huh. Okay, now they're going the other way.
Okay, mine's going down still.
Let's see what happens.
Hopefully not a big letdown. Boom, look at that.
Well, let's see. If you were quick enough, you could have grabbed a few pips.
Yeah, I don't think anybody's quick enough, but okay. Okay, I'm out.
Okay.
I got 5 pips because what I did was I just put a pending order at the top of the previous candle after it settled a little bit.
Yeah, well, it looks
And
like
it probably was a mistake.
the launch pad worked. It went down below into the 40s and then took off.
Yeah, it blasted off there.
And then it just dropped like a rock.
While the big thing that really changed is the Empire State Manufacturing Index. They were expecting a minus 15, and they got a positive 6.6, which means that manufacturing in New York State has rebounded pretty significantly. The retail sales are a positive 0.3. They were expecting a negative 0.2. The unemployment claims, which is a weekly number, was worse than expected. And then the Philly Fed, that manufacturing number came in exactly as anticipated. And import prices came in basically exactly as expected.
Right.
So, essentially what we have here is a mixed bag of news. So, depending on what you think is more important, that's what...
Well, what's more important is how the market's reacting to the news. That's the only thing that's important as far as we're concerned.
As for us as speculators, you're absolutely right.
Yeah, that's one of the reasons I never look at the news. I never even find out what the news is until maybe later in the day or the next day. Because I don't want to be biased by it. Oh, it's good news. It should do this. No.
Right. Yeah, and then but there are people out there that make a bunch of money off of that.
That's true.
My dad was one. My dad was one of them. He was a fundamental trader inside and out. And he lived and died on those fundamental numbers.
Yeah.
But he did that he played that on in the New York Stock Exchange. But here we go. We're just going up and up. Right now, I'm not doing anything because I don't know where it's gonna. I need a place for this to settle out a little bit because look at the way price is moving. I mean, my spreads are actually relatively happy. They're running from about 0.6 to 1.1.
Oh, if you look left, we're hitting where that 2 ball was back about an hour or so ago.
Yep, it broke it. So if it goes and if we get a close above it, then it's a good chance that we get up to the 2,700 level.
Yeah, we need to break these, let's see, there was a high here somewhere around 7. I think we need to break 75 to do that.
Yep, so I think that's where it's going first. Yeah, my H4 high, my last H4 high was 72.3.
I got 71.9 here. So yeah, if it breaks that, then it's off to the races. So basically, one thing's you can just trade the H4, just trade that wick zone. The
Yep.
So here it's just, so it's either, so we got a short around 2660, I think. Yeah, we've got a close at 2660.1 and a high at 2671.9. And we add that extra point in on that 5th digit because just to let the traders know, because if I say, you know, price is at 59, it's the 3rd and 4th digit, so that's why the point, since this is moving in points, we call it the point, even though the actual decimal point comes after the 1 for the 1.26. But we don't even say the 1 because we know it's going to be 1 until it gets down to 0 point, which will be interesting.
Or it goes to $2.
Yeah.
One or the other.
Yeah.
I went short. I got in at looks like I got in at 2663.
Right. Now, one of the things that I've been looking at this week is looking at the multimeter here, and that is, let me see which one that one is. That is so many indicators here. Multimeter indicator 2. And what I noticed is when you see here, this is all aqua and green over here. When you saw that price pull back here, if it pulls back to 0, this one goes red. Unless the next one starts to turn red, that's a good indication to get out of that trade or to get in the trade, because it's going to continue. Somebody might say this, since this is EMA 5, they're saying, oh, you're just following the squiggly. In a way, yes. So
the only thing is you draw, for me anyway, I draw a line at that completed dot, so I pay attention to the completed dot, and I know you kind of pay attention to the current dot.
You're talking about the previous dot, right?
Yep, exactly.
Right. So like right here, it's pulling back down, but you can see here we're still 3.6 above the M5. So if you were in a trade and that the M5 becomes 1 or less, that would be a good place to start thinking about taking profit, because price seems to hit those dots and bounce. And right now we've actually got the H4 chart up, so let's take a look. Here's the M1 chart, and let's just see what happens here. Here comes the M2. There's the dot.
Okay, I just got out of my trade from before, and I got 4.9 on it.
Nice.
Now, the thing is, I did go underwater by 5 pips. Not quite 5 pips, but it just when it did that run up, I was willing to stay there. And the reason why I was willing to stay in the trade is just because of the way it's been moving back and forth. And I figured unless it broke 70, it was probably going to come back down again.
Right. And I've got the fibs from 3 ball to 3 ball here. So there's the upper 3 ball, here's the lower 3 ball, and there's the fib. So we just put in the lower 3 ball. So it's already done about a 90, it's done a 90% retrace, because this is the 90 line, that's the 10 line. And then off of that top, Here now it's coming back down at 26.59. That is the 38% retrace, and that's about where you got out, you said. So
yes, sir.
yeah. So for
Yeah,
those
I
who
got
like to
out.
play the fibs.
Yeah, and it's funny because, I used to do that. I don't anymore. But it is just so interesting how at those particular levels, and I don't know if it's because there's just that many people playing at those levels that causes it to happen, or it's just exhaustion of the market. There's all these theories about why it happened. But what I just saw was that, hey, the market looked like it was getting exhausted in the downside. So I said, okay, let me get my pips now before it goes and bounces off of that. And like I said, I don't know why it does it. It's just something that observable, and it does seem to line up with those fib numbers for whatever strange reason. I don't put them on my chart because I'm looking at price action, and I'm trading off of price action.
Right. And so here on the 1 minute, we've got the 3 ball at the top was the last one put in. And at 26.57, we just did the 38% retrace, and here we go again. So let's see if we can get down to 53.8, which would be 50% retrace. And we've got about 3 minutes left in the video, so let's see what happens here. But once again, the main thing to do is, as you were saying before the video, follow your rules.
Yep. Just, trading the news is no different than trading any other time, other than the fact that you get lots of movement around it. And so what does that mean? It means going in, making sure your money management's in place, making sure your risk management is in place, and making sure that you execute when you're supposed to execute, whether it's taking a win, taking a loss, it doesn't matter. Just follow your rules and you should be just fine. But, unfortunately, the reason why I don't think trading news sometimes is really for novices is because there's so much movement so quickly in so little time that people get excited and get emotionally charged, and then they start forgetting about rules, or things happen so quick they can't get through their checklist quick enough. There's all types of reasons why people don't follow their rules.
Yep, and here's price going back. Maybe it wants to break that 71 this time. Let's see, on the day, that's funny, I don't have the range.
The range is 45 pips for the day.
For some reason I didn't have it. I have it on this one. Yeah, I've got 44 pips. I got 34 on this H1, on this M15. That's like 75% almost.
Yep. Yeah, that's something that you see on the pound a lot. There are days where you look at the hourly candle, the range for the hourly candle, and it's the exact same thing as the range for the entire day. It's not something that happens every day, but it is something that does happen, often enough that you remember it. So we're right now stuck. I think we're now starting to put in a range, obviously, from about 56.4 up to roughly just below 70, so 69.5 or something like that.
Right. So it looks like we are into the last minute here of the fastest 15 minutes in trading. So, fellow traders, I hope you enjoyed that. I hope maybe you learned a trick or two out of that discussion. And I hope you're having a profitable day, week, month, year. So, when you come back to your trading platform or your PC or your smartphone, however you trade, or even if you're still old school and call it in, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.